What a day. What a day. Let's see, are we ready to go? Are we recording? Yep, we're good to go. What a day today was. From being down $60 to break even up $200 on COSM. Finishing the day at a roughly P&L of $174. As we see here. Here are my orders, which I'm about to go through. Finishing the day off strong, $174 up, because of these other two small losses that I took on these other two stocks. Nonetheless, we are up $203 on COSM. Now, how in the world did I do that? Well, let's take a look at the stock. The stock yesterday of COSM, in other words, Cosmos Holdings, was trading at a low of 15 cents yesterday. So how does a stock that had a low of 15 cents ends up breaching $23.84, a 6,872% increase? The stock increased $22.68. That is unfathomable, to say the least. But despite all my fancy words, I'm going to explain to you guys. So, COSM. I wake up and this is what I'm looking at. This is the pattern that is in front of me. Right, correct. I need to see the news. I need to see the numbers behind the stock. What's going on here? I'm looking at the news and it says Cosmos Holdings announces a 1-for-25 reverse stock split. And it changes its name to Cosmos Health. Reverse stock splits. Let's talk about it. When we have a stock split, for many of you that remember, Tesla had a stock split, right? When Tesla reached $1,000 a share, it had a 3-to-1 stock split. What does that mean? Each share of Tesla during its Tesla bull run was $1,000. After the stock split, those people who had one share, that one share became 3 shares, each worth $300. So you see that even though their assets remain the same, they now have more shares, right? Because they increased the share size. That is what a stock split does. That is a stock split. Now, why do people do that? Well, they want to promote more investor growth. Not that many investors are willing to pay $1,000 for a share of Tesla, right? So that's why Elon Musk did that. So why would COSM do a reverse stock split? And what does that mean? COSM, Cosmos Holdings, announced a 1-for-25 reverse stock split. They could do this for a number of reasons. But the primary reason that they would want to do this is to create movement like this. As we see here, let's look at the daily chart of COSM. Right? Before this huge day, and I'm going to get into why all those lines are there, the stock was what? Trading around between 8 cents and 2 cents, right? Between 2 cents and 8 cents. Not that many people are buying. It's not that high in demand. It's really not. So, by doing a reverse stock split, they are reducing the number of shares in the market, making each single share more expensive, right? They are no longer penny stocks, 20 cents, 15 cents, as shown here. We now open the next trading day at $6. That means that every single share got multiplied by 25. So before, during the stock split, our shares were divided. Remember with the Tesla example, each single share was divided by 3. Here, they're multiplied, right? They're reducing the shares. Or the less shares there are, the more each single share costs, right? So that's a reverse stock split. Stock gets split. This is the reverse of that. So that's why you see there was a huge jump that from 15 cents all the way it started trading the next day at $6 a share. What do I look at? Next thing is float. So float, the supply. Our float is 55 million. That means 55 million shares are available to the public to buy. That is considered a low float. Anything under 100 million is potentially a low float, right? Under 20 million, better, right? But anything under 100 million, I consider small float, right? The less float, the better. The less supply, meaning that it will only take a less demand to increase the price. So we have our float here, 55 million. In other words, a float of 20 million here would be even better, right? because there's less supply, meaning it's not gonna take as much demand to move the price higher, right? If there's the more supply there is, the more demand is needed to push the price up. How does a reverse stock split affect the float? Well, as we can see here, reverse splits reduce the share float, or the number of shares available on the public market. To a potential investor, a reduction in the float is always desirable. Okay, so you guys understand what I'm looking at, right? It's also below $10. It's moved up more than $1 within pre-market, and we surely have greater than 5 relative volume, which is going to be a topic for another video. Right off the bat, the stock is meeting all my criteria to look at. So I wake up in the morning. This is what I'm seeing before market open. First thing I do, draw a line right here at the pre-market high, I would say, or the highest point pre-market. I just follow this little VWAP line, the white line, draw a line above it, extend it to the left. Next thing I do is I draw a line over this 4.5, which is the next highest point before market open. Market opens. I take a couple losses, I get stopped out. Take a couple losses, I end up getting stopped out. And the stock ends up balancing around $3, right? Comes back up a little bit, comes back down. And you're gonna see in my second video, which I posted today, the first one was live, where I took the losses. The second one was getting that red to green. And in that second video, you're gonna see me buy at the dip of 3. And I'm anticipating, I see some bids here at 3, people buying at 3. And I'm anticipating that this is going to be a red to green move. I also see a double bottom. What does that mean? Double bottom right here. Let's move that direction upwards. That we have 2 taps on this support level increases our support, increases the strength of our support, as opposed to just one direction change, right? We have 2. So I enter a position around 3. I'm going to add in again at the break of this little high of 3.6. I add in here. I add in there at 3.6. And I remember not selling here, waiting to see if this resistance, which was a previous resistance level, now became support. So this is very important. As we're reading charts, right? We're reading a story happening in real time. This came up here, reversed down here at a level of 3.62. This was resistance, right? People were selling here. But now, once the stock has surpassed this level, when it comes back to this previous resistance, people start buying at here, buying this little dip. That's why you see this little tail right here. People bought that dip. That is, I wouldn't say proof, but that is a signal that the buyers are buying up the dips, and there is strength for a possible move upward. That's what that means, right? So I draw a line right here at the high of this, right? I don't know why I draw this one. Let's figure out why. Okay, so I'm drawing a line here at 4, a resistance level, and then a line here for the break of 4.2. And I remember selling my position when it reaches around 4.25. I remember selling my position right here, which took me to I think a $39 gain on the stock. And I think I just sold because it just looked to me like a good, I knew it was going to drop down, or I had a feeling it was going to drop down because it was a good resistance level, right? We already saw a sharp rejection off that 4.2. I was anticipating the same exact thing. Now, after this level, however, I go away from my trading desk. I step away. I take my $10 P&L profit on the day. Call it a break even, right? Started off the day red, down $60. Now I'm break even. Let's call it a day. Worst mistake that I've made this month was to take my eyes off the stock. That was the worst mistake that I did this month. However, I have videos now to review, to recap, to practice, and improve. And that's exactly what I'm going to do. So, I take my eyes off the stock. And what happens? Now we have these levels. This level of 4, we're going to remove this, right? It's not as strong as this 4.25 now, right? Because just as this was tapped 2 times, right here, We now have 2 taps at this double top, just like we have a double bottom. Now we have a double top, right? And over here, we're this close to the pre-market high, which is then I anticipate that a lot of buyers are gonna add in once that pre-market high level is broken. They start adding in, right? But first, this is how we scale, right? We see this level and we're like, okay, first I'm gonna buy in at 4. It's gonna be a first entry, right? Then I'm gonna buy my second entry at 4.25. Then I'm gonna buy my third entry at 4.5. And then I'm gonna buy my fourth entry on the break. And that's my strategy. Why do I scale? Why do I scale? I scale because imagine, you see this sharp red rejection line right here? That happens in a second, in a minute. Imagine if I don't scale in, but I buy 100, 200 shares at 4.5. Boom, drops right away. 4.5 all the way to 402. That's a 10-cent drop. 100 shares, that's $100. 500 shares, that'd be $50. Even more, no, even more. 100 shares is $50, meaning 500 shares is $500. Exactly. So you see, but however, if you scale in and it crashes, rejects, you still have time to get out because you averaged in. Therefore, not all your size is up here, so you're not automatically at a loss upon rejection, right? So to tie this all in, we identified a resistance level right here, a double top. What does that mean? That means this is a strong resistance line, and just like here, a strong support line, and a break on this level could cause a strong move upward because it's been tested twice. The more times it's tested, the stronger it is, and once that stronger line breaks, we could have a strong move upward, right? Now, we have 2 levels identified. We have our high right here, high resistance, our double top, and we have the pre-market high. These are going to be our 2 levels which we are going to scale in. However, I did not trade this, but looking back at it now, I'm doing this review in real time. I didn't actually review this part of the stock, but I'm doing it as we go along, right? So if I was in this position, what would I do? I would add close to 4 or 4.25, between 4 and 4.25. So what are we going to do? We're going to get a move here. We're going to be patient, 4.25, add, and what do we see here? Beautiful. This resistance line is now becoming a support. You see, it didn't crash right below as fast as here. However, it's kind of dangling around here because the buyers are buying up the sellers. So, and what do we see? A move here. We see, oh, it crashed. At this point, what do you do? If I was holding here, it crashed below, I would sell at the break of this strong line would be an indication to sell, because that means that this support level, which like here was the support level, was no longer able to hold, right? And you would sell instantly. And as you see, it recovered here, and then the same thing over and over again, right? You would enter again here at the consolidation area right after this level makes some support, and come back in, and you would avoid trying to get in at these highs. Okay, but here, this is not how I made the $200, right? We want to talk about Kev. How did you make $200? Well, in all honesty, it was easy, right? As we just see the stock keeps hanging around, right? And at this point, I was already long gone doing an errand, right? And the stock's going to keep dancing around, and it's going to fly past my profit target and just fly. Blew up. I checked my phone, all of a sudden I'm like, holy shit, the stock's at $10. And what I did was scalping. Now scalping is incredibly risky, but what I did was that I buy high, I sell higher. Simple. I actually just changed my shirt. It was incredibly hot in here. So where was I? Making the money in a stock like this isn't difficult. It's not difficult. It's really not. As we see here, the stock literally just during this time period just shot up from $9 all the way to $13. It just kept shooting up. It's not hard to make the money. The scary part is when it reverses on you, as seen here. This reverse is gonna hurt. So I saw the stock around 15. This is what, 2. Stock around 2, and it had literally just noticed that it made a high of 12.5, and then it had this instability point where people are selling, buyers are buying. There's this point of instability, right? We have a long tail upwards, that the stock came back down, the buyers couldn't push it up, and the sellers couldn't bury the price down. The buyers bought up the dip. So we have this little indecision candlestick. So what do? I now have a target. My target right here is 12.6. So at the open of the next candlestick, I'm going to try to average in around 12 to try to get a retest of this level and a breakthrough to 13. So that's exactly what I did. I bought it around my 11.9 level, scaled in, and we broke all the way to 13. And I sold. I sold at 13, as we see here. As we see here at this was when it started, right? These were positions that I sold for profit, right? Here and above is what we're going to be looking at. This is what we're going to be looking at. Everything 15, which is 2 all the way to 250. That's where the action happened. So bought 50 shares at 11.9, 50 shares at 11.9, 50 shares at 12, roughly 50 shares around 12.29, 12.27, another 50 shares at 12.42, and another 50 shares at 12.44. That was 200, I believe it was 250 shares. I was 250 shares at an average of 12.2, and I sold those 300 shares actually, 300 shares at 13 for a gain of roughly $250. So that right there is actually quite simply how I did it. It wasn't quite difficult at all. I just sold at 13. Now, however, you guys saw there was more trading, and as expected, there was. I kept throughout the day. I kept scalping it a little bit more, trying to buy every time we'd get a level of high like this. I draw a line. I wait for it to come back down. I try to buy and then try to anticipate the break of the previous line. Same thing here. I draw a line at 22 for it to dip, wait for it to break, and scalp that break, right? So draw a line right here on this high, comes down, dips, buyers buy up the dip, buy on the way up, and then expect a break upon that previous level. So that is basically just how I scalped it. It actually wasn't quite difficult, honestly, at whatsoever. The difficult part was that I got quite a little greedy, and I was up $256 profit on this stock, but now I'm up $203 because, like I said, I kept trying to scalp and scalp and scalp, and not every scalp ended up working in my favor. I got caught here, and I got caught around here. I think it was around here too. So that was how I made $200 on that one trade, which outclassed my $15 loss on BYSI and my $15 loss on HOTH. Now this is the beauty of risk to reward ratio. Both of these two trades flopped. Hard. Yet I came out with $15 loss and a $13 loss. However, COSM took the prize home. And one trade that worked took it home for the gang. And we're up a total $174 on the day off that $200 trade. And that is the beauty of it. So if you were at home and you're asking, Kevin, but how do I even trade this? I mean, you talked a lot, but you didn't say much. I mean, you just told us where you bought. Simple. All I'm trying to tell you guys is that if you're trying to buy on the way up, you have to identify highs. You have to identify key points of reversal here. You have to, as the stock goes up, you wait for it. You don't buy on the random. You wait for a point of reversal, right? Keeps going up, keeps going up. Let's try to flatten this out. Stock keeps going up. Oh, right here, we draw a line right here, right? So as you see, these lines I drew, what happened to all these lines, right? At all these lines, there was always a little reversal point, right? A point where the sellers were stacked and they started selling. They started selling, creating a clear high, a clear line, right? Clear pattern that there was selling there. You draw the lines there. You wait for it to consolidate. This is the consolidating pattern, right? When the buyers and sellers are both relaxed, but they're both fighting for the price, but there's no clear direction, right? We're waiting to see what direction it chooses. That's the consolidation pattern. Consolidation consolidates, breaks, sells off. Here there wasn't a consolidation. Here the buyers just bid it up, right up, came back up. But the point is, you do this long enough and you start noticing that these lines become patterns, right? So a line right here, you see it came all the way up here, sold off a little bit, so it consolidated, sold off, buyers bought the dip, consolidated for a bit, meaning it went sideways, came back up, and then took off, right? So you draw a line here, you wait for the consolidation, you buy on the break of the consolidation, right? The break of this little area, and then you would add at the high again, add on the break, sell at your profit target. That is how you trade these breakouts. That is how I trade the breakouts. That's how it works for me. And what if it stops, Kevin? Well, that could happen. That's why in your mind, I'll usually have, okay, if it crosses 14, I'm out. And I'll have the finger on my flatten out button, crosses 14, I'm out. And what usually happens is this. Yeah, they dip a bit, get bought up. Okay, you take the loss and you enter back here. But you have to stop out. That is the key. You have to stop out. This was COSM. That is how I made $200. Now, there was a lot of things I can take from this, a lot of mistakes that I made. Way too many mistakes. Number one, being disorganized with my hotkeys. I was pressing the sell button and I was buying. And you could see it in my live. That was literally happening. I was literally making that mistake live, which was ridiculous. You could see in my live, I was shocked. I was flabbergasted. Unbelievable. Now, next mistake that I made. Leaving my trading desk without alerts. I cannot emphasize how unprofessional that was, right? I saw that the stock was clearly above the VWAP, right? We want the stocks to be above this white line, which is the volume weight average price. Volume weight average price VWAP. If the stocks are above it, the buyers are more in the overall control of the stock, correct? It was above VWAP. It was reaching its little pre-market high level right here. And I still left my trading session. Even though the stock still looked good. At the moment, yes, it didn't look good because it came all the way down, but I saw a clear red to green, right? Saw a clear flat consolidation pattern for me here, going sideways. Double pattern, double top, high of resistance. I could easily scale 4, add at 4, add at 4.25, add at 4.5, add on the break at 5. There was a trading plan here to be followed, yet I stepped out of line. And I did not follow it because I wasn't here. Whatever. But the good thing is that I stuck to my little scalping plan. I would buy in and I would sell at the highs. Now, when you guys are asking me, oh, but Kev, where do I sell when I'm scalping? Just sell at the next $0.50 or dollar, right? Just at the next 25 cents, $0.50, dollar, sell on the way up. Not that difficult. The video of the stock that I made $200 on. And I was able to pay a parking ticket. I had a parking ticket come in for like $200, and this came clutch. So, yeah. I'm gonna watch over the live. I'm gonna watch over my videos. I'm even gonna watch over this video, make some editing. If you guys did end up seeing to the end, there's a lot of value in these videos. This is over 3 years of trading knowledge, which I'm putting out here. And for those that use those resources wisely, we'll learn a lot. As always, thanks for watching. Tavera Trading. Kevin out.